Hey everybody, welcome to Trading Capital's daily analysis video. I'm your head market analyst here at Trading Capital. My name is Curtis Scouten. Jumping into the charts on this August 24th. So it was a pretty quiet day. The markets have been exceptionally range bound in a tight range. Looking at the S&P here, basically this was our pre-market open over here. And you had a little float up in pre-market, float down, made a low. And whenever you made that first bottoming tail of the day, at the low, you actually took out yesterday's lows. You had a beautiful reversal candle. That was your signal intraday action. This is the 10-minute chart, so every candle represents 10 minutes. But that was your signal that the markets were likely going to have more upside. Now, there's a little bit of skepticism in this rally because there were pockets that are kind of weak. You had semiconductors that were started the day off weak, which is kind of reason why these markets didn't really rally tremendously to the upside. And honestly, you did have an intraday sell-off over here with specifically around the big cap tech. And I think one of the reasons why the sell-off commenced is because yields have not backed off. They have been on a crazy tear, which we will go over after we discuss this S&P. But the interesting thing to note is I just want to draw up a couple parallel trend lines. So if we take this high over here to this pivot over here, we are kind of forming this range. And if we actually drag this forward, you can see we're trading in this technical range where you have these major pivots over here, major pivots. You just kiss this level over here, and you can arguably probably bring that up so that it's a little bit more accurate, so that it hits the pivots more so, which is right there. So again, pivot, 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 pivots, pivot down here. Now the big question is, are we going to get through this resistance level? If we get through that resistance level, we do have a little minor resistance with this downsloping trend line on the intraday action chart. So that's kind of what I'm watching for. And honestly, we could chop in this range. Even tomorrow, we could head down to the low range, back up to the high range. We can chop in this range, and it might be the case that we stay in this range up until the 10 a.m. Federal Reserve or the 10 a.m. Jackson Hole meeting where we actually hear from Jerome Powell. So that's kind of my logic, but obviously if we break out of this range, your next upside will be likely coincide with this downsloping trend line. If you get through that, the big level is your 50% retrace, and then obviously you start attacking these gaps. So those are kind of the levels to the upside. Levels to the downside, let's just remove some of these trend lines, shall we? Flip to the daily chart. So the volume on the S&P is pretty light today. Basically on the daily session so far we have about 33 million. So very anemic volume, I would definitely say that. You can arguably say this has not been a very convincing and robust bounce. One of the reasons why is because you're failing to close above this wick high at this point in time. Now, I am a big proponent that gaps are meant to be filled, so that does leave a lot of these gaps to the open to the upside, which means that maybe we do have some sort of a technical bounce. Again, I think it might have to coincide with the yields pulling back. Until we see yields pull back, these markets, in my opinion, aren't going to be having much upside. So the QQQ, let's just take a look at the Qs. The Qs again, sorry about the messy chart. You can clearly see this was your breakdown zone. You were holding this trend line. You broke down, gapped over. The question is, will we get that technical retrace to the breakdown zone, which should coincide with the gap fill? That's a big question, but if that move is to come, it'll likely come on the back of yields softening, which will help these tech plays catch a short-term bid. If we take a look at yields, we've been watching the US 10-year, but I want to bring your attention to the US 20-year Treasury because we did pick up UBT today. Yields have had a beautiful rally. If you simply take this low to here, 3%, all the way to 3.59%, that's an extensive move. One of the reasons we bought UBT is because you have two resistance points, which you just hit today. So you can see that we've tagged both of these resistance points. In the short term, I do think you're partially extended, and there needs to be somewhat of a little bit of a pullback, maybe back to this support zone of 3.4, which should give our UBT play a little bit of a bounce. You can see on UBT, we're slightly out of the money, but again, it's just a starter position on UBT. Considering we sold our UBT up here at 34.90 not so long ago, you can see we've already got a depressed level, a better entry level than we previously bought. I remember we bought this retrace back where we were around 31, we sold up here. So it's good to see that we're now accumulating bonds at an even better average with less of a position, more maneuverability. There's a gap fill up here, which I'm eyeing to add up add at. There's the double bottom zone, which I would love to add at as well. But again, you're coming into an oversold condition where this should catch a little bit of a bounce in the short term as yields pull back. Let's take a look at the US dollar. So the DXY originally had a strong day, coming substantially off the highs, but it is still positive on the day, and that's partially because of the yields. If we simply look at the US 10-year, which is the one that we have been following, you can see it almost hit our target level today, but it's had this power surge, and it really does need to consolidate in the short term. Let's take a look at oil. WTI is breaking through this resistance points, which we touched base on a couple days ago. We said that it's likely going to break through this zone because this was your breakdown zone, your retrace to the resistance, which matched with this pivot. So you weaken that resistance by hitting it, but price action wasn't ready to break through at that point in time. And now you're starting to see as the bulls catch a little bit of momentum. It'll be interesting to note if we close above the 200-day, which is actually looking pretty positive at that point in time. And I'm actually hopeful that oil pushes up to our level because I would love to accumulate yet again another oil short. Interesting thing about oil is that I do think there's going to be an exceptional long play opportunity, but I don't think it's quite yet. I think we're going to have to start to see that. Once we start to see that SPR really go down into the depleted levels, that might be our signal to go long oil, and that's kind of what I'm waiting and coinciding for. But if we get a retrace to this, I'm looking to accumulate the SCO, and that is going to be our first major technical level where I would definitely feel comfortable shorting oil again. Natural gas, not too much price action natural gas, but it is on the bearish side. So natural gas has had another down day, technically speaking, but it's relatively flat. It's just down in the session. Now, the interesting thing to note is that you still are inside of this green bar here, but you are closing below this pivot, and you are closing below these wicks, and you're also now closing what looks to be below yesterday's low, closing low. Another thing I'm watching on natural gas is the weekly basis, because you have these major topping signals that are in play. You have this reversal candle over here, you have this reversal candle over here, and look, you have failed to close above that for now 1, 2, 3 weeks. You pierced it, was unable to hold that above, which means this tail is still technically intact as resistance. And then again this week you popped up higher, looking like you're failing to close above it with an even nastier all-time high weekly reversal candle. If natural gas closes in 2 days with a nasty weekly reversal candle like this, the top is in for me. And I think this thing will see a lot of downside at the minimum to the 630, 650 level. And I will most likely probably hold all the way down, which would mean our KOLD would probably net us, 50 to 70% gain, which is probably going to be very incredible. But again, let's just monitor. Let's not get too carried away. There's still 2 days left, but ultimately I am seeing bearish distribution happening in the natural gas sector, and I do think it's only a matter of time before that recessionary fear takes hold and really drives it down. Looking at gold, gold initially had a positive rally, was up, tagged the resistance level, which is a good thing because it's now weakened that level, pulled back off the highs, but it's still positive on the day. And considering interest rates are so strong and the dollar is also positive, it's good to see gold trying to slightly break that US dollar interest rate correlation, where when usually the dollar is positive, gold's negative, or yields are positive, gold's negative. So let's see if gold can continue this momentum. I think I am a little bit optimistic. We are starting to see some of the miners perform a little bit better, with the GDX starting to perform. And it's really good that the GDX is actually outperforming, say, the S&P 500 today. So that is something that I'm also eyeing up and watching. So first off, I just want to say amazing day in the day trade room. We crushed it today. We went 10 for 10. Now, I didn't issue all 10 day trading opportunities to the members here. However, I did issue many day trade alerts. We day traded Oxy 3 times. We banked winners on all 3 short trades. We shorted TOST, which we banked money on. We shorted FTCH, which we banked money on. And it was just an epic day in the markets for us today in the day trade room. And we also covered our STNE. I mean, probably should have been a little bit greedier on this trade, but you can see how powerful STNE. Just to think, we bought this here 2 days ago. I'll show you on the daily chart. We bought STNE right on this candle around here, 856, and look at this pop. Massive pop. We sold here, so we could have obviously squeezed much more out of the trade, but when you get a double-digit gain in your pocket in basically 2 sessions, you run with it. You can't be greedy. That is like a gift in the trading world, and we just banked money. Now, if we get a retrace down to support, would I buy again on a softening, weakening market? Absolutely, I would consider buying again. Is there a chance that STNE can still go up to this 1159 mark or 1160? Absolutely, it can. But again, 2 days, double-digit gain. Thank you very much. I'll take that any day of the week. And that is just really, really impressive. We also got out of our BMY short for a small gain. We've been holding that for a little bit longer. I'm a little bit disappointed in the price action, but overall, still a winner in our pocket there. But if we flip back to the SPYs, let's just see how the market is shaping up here. So it's looking to be that the intraday volume is starting to pick up to the downside. This is going to be key. What type of close are we going to get? Are we going to get this resistance of this intraday 200 bearing down on us and forcing us below the short-term moving averages, which could break this potential bullish consolidation? It's a big question, but certainly volume is starting to pick up, and we need to monitor that carefully because this volume candle over here is now picking up higher than this area over here, which was our breakdown and sell-off. So it's very, very important to note and watch what type of close. Let's just draw our parallels back on here so that we can see what is transpiring. So if we put that there, so you can see we're tagging that resistance level, and it'll just be interesting to see if we can actually get through that or not. So far it is a little bit of downside pressure. I would favor that we see a little bit of downside heading into that meeting with potential uncertainties, but I don't think there's going to be much downside in the sense that we make new lows. I think we're going to be range bound up until a decision comes from that Jackson Hole meeting, which is either going to break us up or break us down. In my opinion, what I think is going to happen at that Jackson Hole meeting is the yields will most likely soften up a bit, which will probably give a lift to the indices for a short term. And then I do think maybe we get a bounce on the daily chart over here to maybe this gap fill around 422. Optimistically speaking, maybe you fill the upper range gap here, but that is kind of a big if. But I do think we get a little bit of a float up after the FOMC meeting. That's certainly what the statistics are showing, which is okay. You know, I'd be happy to accumulate some of our shorts and offload a few of our longs at that point in time. But we still have to remember there is a divergence between the S&P 500 here and the bond market. The bond market is typically the smarter market. It's the bigger market, and that is certainly where I take most of my signals from. Typically, if there's that divergence happening between, you know, the long end bond market and the SP, that's never a good thing for the asset that is making the divergence to the upside, because typically speaking, if the S&P makes a negative divergence or positive divergence away from the bonds, so that being said, if S&P rallies higher and bonds fall, that means that it's more likely that the asset that is running up is going to fall and catch up to the bonds, and if not surpass that. So let's just monitor the charts. Once again, it was an excellent session, and we'll just continue to try to print out these day trade alerts and swing trades. And certainly, you know, I'm optimistically looking forward to the next down leg in the market, but at the same time, I know it's going to be rough for many investors out there, which is why I try to do these videos and help educate people, because honestly, to me, there's so many conflicting opinions out there, and let's just face it, I'm never right 100% of the time, but I've certainly been doing better than most people in this 2022 trading environment, because I've been reading the charts while incorporating a little bit of macroeconomic analysis and cycle analysis and just studying history. I mean, we have broken massive trends every which way you look at it, and that is something that is certainly not playing into the buy and hold investors that have been outperforming for the last I would say 40 years. So again, lots to consider, but thank you all for being members. Please give this video a like or a comment down below, and stay tuned for more price action as we unfold for the rest of the week and head into that Jackson Hole meeting.